Positive global cues failed to lift the lull street. Sensex and Nifty declined by nearly 1%. Mid-caps fall in tandem with the blue chips.
The Central Electricity Regulatory Commission approves market coupling for power exchanges in the day-ahead market segment from January 1st, delivering a body blow to IEX. The move is expected to see business migrating to other exchanges. The stock tanks in trade.
IT stocks fall despite a standout performance from Infosys. Even Coforge and Persistent fall due to steep valuations and some concerns on margins for the former and deal wins for the latter.
Hello and welcome to Markets Forward, your go-to show where we get you up to speed with regard to today's trading action and we set you up for tomorrow as well. I'm Nigel and with me is Surbhi. Hey Surbhi, that's sort of a day, a bit of a dull day actually. The bears were on top and I think an element of expiry as well did play a role today.
Absolutely, and we didn't have a best-in-class earnings. I mean, nothing that could really light up the fire in the bulls camp. So it was literally bears all the way. So just very quickly on the market, let's quickly recap what today's day looked like. Now, yesterday's move above 25,200, that was history very, very quickly because today the market lost about 150 points on the Nifty. And while you can put the blame, of course, on the IT space, it wasn't just IT alone. You know, there was no sector that could come in and offer any kind of a counterweight. So whether it was banks or whether it was FMCG, it was literally a case of all fall down. The IT index, of course, with its story on, a sharp reaction to earnings that were actually not that bad, one can argue. That was really one of the stories of the day. And then, of course, once again, we had weakness in the mid-cap space as well. Today, the advance decline ratio was negative. You almost had 2 stocks declining for every one that was advancing. So overall, yeah, Nigel, as you said, negative day, and none of that global trade deal optimism, none of that rubbing off on us.
Well, that's right. So that's about today's market action and the way things are shaped up. Well, let's run you through what we have got lined up for you in store. Well, we start off with all the top movers and shakers. Hormas will be standing by to help us out with that list. Then we got a slew of stocks that witnessed big movements in trade today. IEX hit a 52-week low today following the CERC's approval of market coupling norms. Nestle declined after posting a weak set of numbers, while Canra Bank surged on the back of sequential improvement in asset quality. Last but not the least, we'll delve into all the key market events you need to track to set you up for tomorrow. But as always, a man of the moment, the opening batsman of the show, Hormas is standing by on the big wall with all the movers and shakers. Hormas.
Lots of movers and lots of that shook beliefs as well among a lot of people today. Start off with the newsmakers, then of course can't not mention IEX being the first one, 30% lower on that stock in today's trading session. And of course there were a lot of others as well that saw losses in today's session, including the likes of Trent and so many others. And there were some of the other earnings reactions that took place in today's session. Take a look at this. Mahanagar Gas, Samvardhana Motherson also among the potential US-EU deal ending 4.5% higher, and Mukund too seeing gains of around 6%. But we're shifting focus to the earnings reactions. It was dominated by 2 names, Persistent Systems and Coforge. But after which, the positive earnings reactions that took place. Look at Force Motors, look at Thyrocare, look at Senor's Pharma. Canara Bank saw asset quality improve. Indian Bank, and both Canara and Indian Bank took the PSU Bank index higher along with them. But the negative earnings reactions, of course, as I was mentioning, dominated by Persistent and Coforge. But along with Persistent and Coforge, Cigniti Technologies also took a battering today, 10% lower on that stock as well. Nestle saw a brief recovery after its results, but that recovery was very quickly sold into, ending at the lowest point of the day. And Motilal Oswal as well, seeing a negative reaction to its results. A sector that stood the test of time today was pharma. Most of the pharma names doing well. Ipca Labs ending almost 5.5% higher. Another 52-week high for Laurus Labs. And Cipla doing well for itself ahead of its results. And lastly, the stocks that ended at a 52-week high in today's session. Of course, another new high for Eternal, a new high for Paytm. So the new age companies continue to make a buzz. And Tilaknagar Industries, after the confirmation of the CNBC-TV18 news break, 4.25% higher, a new high for the stock as well. Back to you guys.
Well, thanks for that, Hormas. Let's move on and talk about the day's key movers and shakers, and IEX was definitely one of them. The stock tumbling to its 52-week low, sharp declines almost a 28% cut. This after CERC, the Central Electricity Regulatory Commission, has decided to usher in market coupling in a phased manner. Let's go across to Vivek. He'll tell us more about it. By the way, Dalmia Bharat holds about 11% stake in IEX as well. Even PTC gets impacted. So let's understand who gets impacted in what way as market coupling becomes a reality. Vivek.
Well, that's right. The single biggest overhang as far as the share price of IEX was concerned was the implementation of market coupling. And the somewhat surprising development overnight, we did see CERC go ahead and decide to implement coupling in the day-ahead market. The DAM market will be done from Jan 2026 onwards. The stock of IEX was actually in the F&O band. Despite that, saw a very sharp knock today. And along with that, like you mentioned, the share price of Dalmia Bharat too was quite volatile. Remember, it holds close to 11% stake in IEX. And PTC India, that holds a 22% stake in a rival platform company called HPX, that particular stock actually saw an up move. Now, what exactly are brokerages saying as far as IEX are concerned post the implementation of market coupling? UBS says that this is a negative surprise both for them as well as for market expectations. Now, this has come despite Grid India actually saying that there has not been too much of a benefit seen as far as market coupling is concerned for the short-term power market. In fact, they are saying that this will have a significant impact on IEX, given the fact that the day-ahead market and the RTM market actually accounted for a total of 80% of FY25 revenues for IEX. Bernstein, on the other hand, says that this order is quite negative compared to what they were anticipating. They're saying that the transaction charges too will come down, given the fact that rival platforms will now have to compete on transaction charges in order to go ahead and attract volumes. Now, what they're saying is that with the moat of liquidity gone, now the only way to compete will be via transaction charges. In fact, they see reduction in transaction charges, and on the back of this negative development for IEX, that particular stock saw quite a big knock in the trading session today.
Okay, all right. Thanks a lot for that, Vivek. Well, we have Amrish Palika, independent market expert, and Ruchit Jain from Motilal Oswal Financial Services, who joins us. Ruchit, coming to you with regard to your call on the markets. But Amrish, first up, tell us about this development, IEX. Actually, towards the end of trade, there was some sneaky buying that we saw, not for the faint-hearted. But what's your view? When a stock falls 25 to 30%, then it becomes extremely tricky. Pity those who have been holding it for a long time, because the single strike has wiped out everything.
See, basically, when the stock falls like this, you normally have those bargain hunters coming in to buy, and because of which you could see some amount of bounce back. But then, fundamentally speaking, this news is extremely negative for IEX. And whenever we had these rumors in the past 1.5, 2 years, we've been getting these rumors on a regular basis. The stocks to crack and then bounce back because the rumors were not getting confirmed. But right now, what we have is a confirmed news. So this is clearly a negative for IEX. And like I was saying earlier, possibly we could see levels of 105, 110. But before that, we could see a small bounce back. But those who have been holding on for long term may finally give up and sell out at this point of time.
Got it. All right. Amrish, Ruchit, give us your call on IEX. How does it look? And technically, if there is support anywhere, because the chart must be absolutely wham-bam. But how is it looking in the chart? And what about the Nifty? It came down today, but still the VIX is at very low levels. Still you have shorts in the system. The PCR as well came down. I don't know, going at current reckoning, difficult for the Nifty to go down more than 250 points from here. But how is it looking for you?
Yeah, hi, very good afternoon. So if we first, I'll start with the IEX. Definitely a very high volume, negative candle today. And usually, whenever we see such volume-based selling, whenever we see any pullback move after such selling, there are many traders or investors who are stuck in the position and they want to exit. So this would restrict the upside in the short to medium term in the stock. Technically, major support for the stock is coming around 110, 120 range. So I think there could be some more downside towards that 120 to 110 range. So any bottom fishing should not be done over here. As far as markets are concerned, we are in a time-wise correction phase. We can clearly see that after some correction from 25,600 to 25,000, markets have been sideways since last few days. 24,900 remains a very important support for the stock, whereas for the index, whereas on the high side, we are not able to surpass 25,300. So this clearly a signs of a time-wise corrective phase within an uptrend. But yes, overall trend remains positive. So 24,900 should be the stop loss on existing long positions. And as far as the short positions of FIs are there, I think these are short heavy positions. Since we're approaching the expiry going ahead, I think some of these positions would be squared off on the expiry itself.
Okay. All right. Got that. Gentlemen, stay on. We'll have more questions for you in just a bit. Let's move on to something positive as well. IEX was down, but shares of Canra Bank were surging in an otherwise weak market, up almost 6% after the bank reported improvement in asset quality sequentially in the first quarter. The lender's net interest income, however, was down 1.7%. Net profit was up 21%. Gaurav is joining in with the report card. Gaurav, so what worked for Canra Bank in this quarter?
Well, as when we talk about the numbers, net interest income declined almost by 2% on a year-on-year basis. But when we talk about net interest margins, there also we saw a little bit of pressure. And the reason being that yield on advances now, that declined almost by 30 basis points, while the cost of funds remained stable. As a result, we saw net interest margins also declined almost by 18 to 20 basis points. But what played out well is the treasury income. Now, it has increased almost by 300% on a year-on-year basis. And as a result, when we talk about pre-provisional operating profit, we saw a sharp growth of around 12% on a year-on-year basis. Again, when we talk about the asset quality, there also we saw a bit of improvement. Credit cost, it has gone down almost to 0.72% versus what it was at 0.9%. So good recovery is what we saw there as well. And that is the reason why we saw 21% increase in the profitability. Another point to highlight is that the ROA, now bank has reported ROA of 1.17% versus what it was guided at 1.05% for the whole year FY26. So definitely there also we saw some positivity. On the loan book front also we saw a good set of numbers. It has increased almost by 12%, and this also marks as 2% increase on a sequential basis. Deposits also grew in line. It grew at around 9.9%. Let's not forget that for loan book, bank had given a guidance of 10 to 11%. So it was again better than what the bank had guided. And as a result, we saw some spike in the stock price as well.
Okay, all right. Thanks a lot for that, Gaurav. Well, moving to the FMCG space then. Shares of Nestle, well, they declined after it reported a weak set of numbers in the first quarter. The profit dipped on higher depreciation and finance cost, while the margins declined on higher commodity costs. But price stabilization and a pickup in urban growth helps improve the outlook. Mangalam joins us to fill us in with quick analysis on that. Mangalam?
Well, Nestle was lower in today's trading session. The company reported a soft performance in the first quarter, but the indications are that maybe this quarter was a bottom-out quarter and things are likely to improve from here. Why do I say that? Because, look at the management commentary. They suggest that demand is improving, and secondly, on the cost side, it is actually seeing some sort of relief coming by. So on reported numbers, revenues closer to 5,100 crores, slightly above street expectations of 5,080 crores itself. The EBITDA at 1,100 crores, largely in line with expectations. The margins coming in at 21.6% as well. The net profit, now that was below street expectations, largely on account of higher depreciation, presumably on account of the Sanand plant coming on stream, and secondly, on higher finance costs, which the management alluded to temporary bank loans to manage operating cash flows. Importantly, they've said that significant rise in demand over the recent quarters has led to growth in urban markets, and also notice stability in prices of edible oil and cocoa. They are seeing a declining trend in coffee, which is beneficial for their margins, and milk prices anticipated to decrease with the onset of a favorable monsoon and flush season. They reported 3% volume growth, again at the higher end of street expectations of 2 to 3%. And going forward, the big trigger for Nestle will be a management change and the strategy under Manish Tiwari, who takes on as the role of chairman and managing director from 1st August.
Yes, indeed, big leadership change, ahead at Nestle. Thanks for that, Mangalam. Amrish, what do you make of the market's sharp reaction? Yes, there's some margin compression and the rise in the finance costs there, but would you be a buyer at all at dips?
In fact, it's just not Nestle. I think, across FMCG majors, we are looking at an uptick in this quarter. But then possibly it's getting deferred by a quarter or more. However, I think the downside for the FMCG space, including Nestle, seems limited from here. And I think it's a great time to start buying into FMCG. Just not Nestle. I think ITC, Dabur, HUL. These are the 3-4 stocks which should be there in your portfolio.
Got it. Okay, all right. And Ruchit, you want to comment on the banking names? Can Bank?
Yeah, I think some of the PSU banks such as Canra Bank, Bank of Baroda, SBI, I think the price-wise downside seems to be very limited from them. since last 2 months, we are witnessing that whenever there are dips in these stocks, they are getting bought into. So I think overall, still no signs of a breakout, but at least the no, price-wise correction seems to be limited in this PSU banking names.
Okay, all right. Thanks for that. But we need to talk about tech. Tech stocks, Infosys, TCS, both them fell in trade despite reporting, good set of numbers in the first quarter. That was Infosys. Rima joins us with the IT report card. Rima, take us through the top IT firms and how the numbers did shape up today.
Indeed, on the growth front, Infosys, Coforge, Persistent all did very well. Infi was at 2.6%, Coforge was a stellar 8%, but the stocks are correcting. So let's quickly run you through a couple of reasons why. One for Infosys, beginning with that. The upper end of the revenue guidance, which is 3%, has remained unchanged. But now the upper end also includes an acquisition of 40 basis points, which means the organic guidance has been cut by 40 basis points at the upper end. So that could explain the disappointment. For Coforge, analysts are pointing out that the EBIT margin shared by the company at 13.2% has certain one-offs. So for instance, a bonus cost, the forex element. If you strip that out, the adjusted margins would be a lot lower. Secondly, even this CapEx spend, the company has spent more than $60 million to set up an AI data center for its clients. Now, data centers, up until now, IT companies have never invested in CapEx. They've always been an asset-light model. But now with this investment, it becomes CapEx heavy. And it's not easy. There are costs associated with maintaining that. And therefore, analysts are a tad bit worried. And thirdly, let's come to Persistent then. Now, Persistent's revenue growth, you could quibble, was a little short of expectations. 3.3% versus 3.8% expectation. The company has deferred the wage hike by 1 quarter, which means there are concerns, in the mind of the management, perhaps. There is uncertainty. And finally, the deal wins, you can call them steady, or you could, on the other hand, say it's unexciting because they've not increased on a quarter-on-quarter basis. And finally, for companies like Coforge, Persistent, they've been such darlings of the IT cap. The valuations are on the higher side. These stocks are trading at about 30, 35, 40 times PE. So that also, makes it difficult for the stocks at this juncture. Back to you.
Okay, all right, Rima, got that. Thanks very much. Let's quickly go back to our guests for a take on this. Rujit, on the chart specifically for Persistent and Coforge, which have been the outlier performers in the sector, today's declines, has it violated any important levels? What's the advice now on these two mid-cap IT names specifically?
Firstly, if you look at the entire IT space in last 3 or 4 months, we have not seen that kind of trended up moves in many of the IT names, except I think Coforge, which showed a relative outperformance. So I think IT sector as a whole, there are no signs of any up move coming in the short term. So I think the relative underperformance could continue within the IT basket. Persistent today has breached its 200 DMA support. Even Coforge has witnessed a selling supported by very high volume. So I believe that going ahead, IT would not be the sector which would take the leadership in whenever the markets resume its uptrend, and some relative underperformance could be seen for more 1 to 2 months.
Okay, all right, gentlemen, thanks a lot for joining in, Ambrish as well as Ruchit, and helping us out with the analysis on all those stocks. Well, before we take a break, just want to highlight, the big deal that we announced. Tilaknagar Industries surged in trade after signing a definitive agreement to acquire Imperial Blue division from Francis Bernard Ricard. Now, the acquisition will be executed at an enterprise value of around 4,150 crore rupees. Now, this is positive for Tilaknagar Industries because it takes them into the next league. To put out a few numbers, last year they did sub 1,500 crores. They're acquiring an asset which has 3,000 crores. So all in all, the total revenues will go up by 3x from what it was doing earlier. Even in terms of volumes, from around 12 million tons, it'll go to nearly around 35 million tons. The management says the deal will be EPS accretive, and the deal is done at around 1.3 times sales, which isn't very, very expensive. In fact, it's quite attractive. It was more than 6,000-7,000 crores. The street would have been a little bit cautious on it. Now, they get an entry into a whiskey market, which is more than 63% of the Indian alcohol market. And how will they fund this? Well, they've taken a resolution that they can go up to 6,500 crores in terms of a fundraise. They don't need that much, but a broad breakup. They've given equity. It could be around 2,500 crores at most. Debt could be 4,000 crores at most. But this is good for them because it helps them in terms of scaling up. It helps them enter, a pan-India presence, and it helps them enter the whiskey market as well, from just being a brandy market or from just being a South-based player. They're saying it's EPS accretive. There are synergy benefits. We'll have to track more on this. But even after rallying more than 20%, the stock put on close to 4.5%, telling you the street believes now Tilaknagar Industries has entered the big league. All right, enough of that. Time to slip into a short break. On the other side, we'll get you all the top corporate voices along with all the events you need to track. Don't go anywhere.
Welcome back. Now, India and the United Kingdom have signed a free trade agreement, which is estimated to boost bilateral ties between the two countries by $35 billion. British Prime Minister Keir Starmer received Prime Minister Modi at the Chequers House. During the visit, both the leaders will review bilateral trade ties and discuss issues including technology, investment, climate, defense, and migration as part of the trade deal. India will lower its average tariffs on products coming in from the UK from 15% to 3%. British Prime Minister Keir Starmer has said that India and UK are launching the Vision 2035 strategy to work more closely on defense, migration and health. While Prime Minister Narendra Modi says that Indian security agencies will continue to enhance cooperation and coordination on matters such as extradition of economic offenders.
Cricket is not just a game, but a passion. And also a great metaphor for our partnership. There may be a swing and a miss at times, but we always play with a straight bat. We are committed to building high-scoring, solid partnership.
This is the biggest and most economically significant trade deal that the UK has made since leaving the EU. And I think I can say that it's one of the most comprehensive deals that India has ever done, boosting wages, raising living standards, and putting more money in the pockets of working people. It is good for jobs, it is good for business, cutting tariffs, and making trade cheaper, quicker, and easier.
Okay, well.
Okay, all right. Well, before we me? Oh. Well, before we wrap up on the show, let's get you all the key market events you need to track for tomorrow. Upasana standing by to run us through the list. Upasana?
Well, first up, let us look at the key important results that we'll be closely tracking tomorrow. As we kick off the results season tomorrow. Now, let us look at the key companies such as Bajaj Finance, Bank of Baroda, Cipla, Laurus Labs, GMDC, Petronet, LNG, SAIL, SBI Cards, Sterlet Tech, and even Tata Chemicals will be reporting its numbers tomorrow. Stocks like Shriram Finance and Poonawalla FinCorp will also be in focus as both these companies approve their fundraising plans along with their results for the quarter. Now, stocks like Abbott, Central Bank of India, AkzoNobel, Info Edge, Arvind, ICRA, Lupin, all these will be in focus as they go ex-dividend tomorrow. Now, let us look at the domestic data. Foreign exchange reserve data will be out tomorrow evening around 5 p.m. So we'll be keeping a track of that as well. And also, SC schedules final hearing on 28% GST on online gaming. So the final verdict will be out tomorrow. And coming to the global data lastly, UK will be reporting its consumer confidence data and even its retail sales data. And President Trump will begin its travel to Scotland, UK. So all in all, it looks like quite an eventful day tomorrow.
Okay, all right, Upasana, many thanks for that. And with that, we're out of time on this edition of Markets Forward. Thank you so much for watching. News and updates continue on CNBC-TV18.